Hey everybody, Mark Yegi here, and welcome back to the channel. I just want to show you what I'm about to do in my account, one of my accounts, and it's a stock called JD.com. Now these are, this is a Chinese retailer, and China is reciprocating back on tariffs, and I think we got a trade war going on with China. And it'll eventually end, but for right now, I see, if we're going to put tariffs on a lot of these retail products, they're not going to get from us. We're not going to be bringing stuff in from them. I'm not sure this is exactly like an Alibaba, but to me, it's kind of in the same realm. It's not a great performer, and this is a really weird looking chart. I'll be the first to admit. But I want you to take a look at the chart because it's got all kinds of things that I want to show you. First of all, you could see all these little gaps. Look at the gaps, and you know what I always say, look, there's 5 gaps on this up run, up to 48. And then gaps down. Look at all the gaps. Now, a lot of them have gotten filled, but there's tons of gaps, which just means erratic trading. It's a Chinese stock. It's maybe not as liquid. I don't know. But this is just a weird chart. And so I'm looking at this going, there's a lot of weakness in this chart. It's below the 50, and it's trying to bounce off the 200-day moving average right now. So I think that's the setup on the chart. However, there's some other anomalies here on the chart that I want to point you to. First of all, this is a 47.82 high, and then it couldn't make it and hold it, this 46.45. Look at that reversal kind of candle there on that day. And then it's never been able to hold that. So we got a double top pattern, number one. Okay, I don't normally short stocks that are above the 200 or above the 50. Well, this one's below the 50 and above the 200-ish. Right now, it's right at the 200. So maybe there's a little bit of opportunity for it. So we got a double top here. We've got this leg down that, it's a little hard to see because it's weird, but that's like a $15 leg there. Then we got a bounce here, and a $15 leg would put us around 31, which is kind of where it is now. But look at this. There's a gap right here that I drew this little red line, and it just tagged the gap this morning. It just tagged it, which I find amazing. And then this swing point of 32.78, I think that's in play. That's not a big stretch to say that it's going to hit that. But here's where I think this is setting up to go. This is the last gap that I can see that hasn't been filled on this chart. And I mean, I guess there's one out here, at 23. But for right now, the obvious one that hasn't been filled is this 27.14. Well, if the stock is 35 and it goes down to 27.14, that's like a 20-something% run down. And I think that's where the stock is going, especially if we have a trade war. JD.com as a retailer, might get sucked into a recession in China, whatever. I don't know all the fundamentals. And frankly, the bottom line is it's a Chinese stock and we're in a trade war. But that's not why I'm doing it. I'm doing it because there's a lot of weird stuff on this chart and we have a double top formation and I see it going here. So let's take a look at the options. Now I'm going to do what's called a juicy put strategy. That's my little name for a bear put debit spread. I think it's what it's called. I don't really care. I don't like that name. So I'm going to go with what's called a juicy put. And so let's take a look at what this looks like. This is JD.com. And you can see the stock right now is down $2 for the day, trading at around $35, something like that. So what I'm going to do is I'm going to look at buying this. No, I'm sorry. I'm going to look for a the deepest delta that I can get without really like having to spend a lot of time. So I'm going to go out to September, okay, and I'm going to find a 73 delta. Now I normally like an 80 to 90 delta, but I think that if the stock goes down, this delta is going to go higher, okay, because it's going to go more in the money because it's a put. It goes down. So we're doing a put spread. We're buying a long put and we're selling calls against the put, and that's going to create income. I'm not necessarily sure that I care so much if it goes down and tags those little spots that I thought about on the chart and that I showed you, but to me, I want to buy these 65s. So let me just go ahead and do that. I'm just going to go ahead and buy these 65s. Let's see, you can see that there's 99 cents worth of juice. I want you to just remember that for a second. So I'm going to go buy these 65s. Okay, we're gonna buy them, at the market. Yeah, I don't know. Let's go at the market, and we'll do 10 of them. just to get myself into this position, which is a $33,000 investment. There's my base position. Okay, now what I'm gonna do is I'm gonna go ahead and sell right around the money, okay? Maybe a little bit, these are all puts, so I wanna go where I'm gonna pick up some decent juice. Now look, if I go just slightly out of the money at these 34s, okay, or 34.50s, these are 34.50s, I'm gonna pick up $281 a contract, which is 2,800 bucks, okay? Now these go out about 18 days. Let's see if I can go out a little bit closer and still get something decent. Let's go out maybe 10 days. Hey, that's pretty good, $250 a contract, okay? Those are slightly out of the money. Why don't we go in the money? Because I'm an in the money guy. This is a little bit more certain. I still get $265 of contract, right? Think about that. I'm paying 99 cents a contract on the long position, but I make that all back in the first week. I'm getting back $2.59. Now, we need the stock to continue to go down or stay the same, but we're just gonna try to milk the juice out of this guy for as long as we have it, up until September. So what I'm gonna do is I'm gonna go ahead and sell these calls, okay, right mouse click, sell, single, selling 10 contracts of the April 35 puts at the market, and let's just go ahead and do those. Now let's take a look at what those look like in the account, okay? And so we've got, let's see what we've got here. JD. All right, so we got some JD action. We are long 10 contracts. We got 165 days on them. We paid what, 90 something cents of juice, 96 cents of juice. We just got back $2.64 of juice. Like, that's the income we're getting every week, right? That's pretty amazing. And so if the stock continues to go down to where I think it is, it's gonna go in the money more, and I'm gonna roll it down is the plan. And I've got a circuit breaker built in, but I don't remember exactly where it is, so I have to go back to my trading plan and look at it. But now that I know these, I can kind of tweak that circuit breaker. The bottom line is that probably if it goes back to the 50-day moving average plus a buck or so, I'm probably going to exit the whole position. But I haven't decided yet. This is kind of a hedge position on a few of the longs that I have in my account, MicroStrategy and whatnot. But you could see that if I can just collect, you know, that $2.60 a share every single week, and I'm not saying I can because we're in a volatile market right now, but think about it, 50 weeks times 262, you know, even if it's $250 a contract, that's like $125, and the price of the stock is 35, right? So it's an incredible return. And the idea is that we're just going to juice this put for as long as we've got it. So I've got a couple of other ones that I've started on DR Horton and Best Buy, which have worked out well based on the chart coming down and doing this juicy put strategy. And now this is going to be another one that I'm adding to the portfolio. So hope it makes sense. Hope you get it. I have other videos here on the other side, which is covered calls, called the cash flow machine. And this is the cash flow machine basically in reverse. So we're just trying to make and juice money out of the puts. And I'll see you on the next video. Bye. Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But you know, if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more, or click this link for more videos, masterclasses, and free resources. See you there. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.